Hi, welcome back. You're watching Trading Hour. Let's invite our market guest, Jigar Mistry, co-founder of Buoyant Capital, who joins in now to talk about what's ahead for the market. Hi, thanks very much, Jigar, for joining in. Over the weekend, the government has taken quite a few steps to take on inflation, primarily on fuel prices, LPG subsidy, etc. You have argued about incremental growth in Nifty being driven by the commodity complex. Now, it looks like the government is taking some steps now. Do you think that in some part this is being addressed?
Yes, Mehta, good morning. Thank you for inviting me to your show again. I think, yes, the fallout of inflation is now, getting visible, not just in the monetary policy terms, but also in the fiscal policy terms. And there is a lot of alignment that, a few of these announcements do. So if you look at it in calculation terms, you're talking about a 1 lakh odd crore moving, away from government coffers and into, the corporate profitability, so to speak. And, that also reduced inflation to a large extent. Even with regards to the steel and pallet duties that were announced, you have to take it into context that when the industry was going through a very big slump, the government did come to help and essentially, introduce the minimum import price, which allowed a lot of companies to survive at that point in time. And this is sort of a tax in order to, do their own bit in terms of reducing the inflation. Petroleum, is another. So we have, discussed the math before. 42 odd million barrels per day of imports. That's roughly 1.6 billion barrels of imports, and essentially 4.2 lakh crore of incremental bill, of which 15 odd thousand crore, 15 odd thousand liter is basically the sales of petrol and diesel, on which prices have been raised by about $10. So 1.5 lakh crore has already been passed on to end consumers, and the balance 2.5 lakh odd crore needed to be passed on. Now, the reduction that comes through on an annualized basis reduces the burden, by about a 1 lakh crore, which has a lot of implications. The overall BSE 500 profitability is only 7.5 lakh crore. And therefore, a 1 lakh crore reduction, passing on to the consumer, which eventually otherwise would have gone through in some other way, helps the corporate profitability in a reasonably good click. So I think it's a step in the right direction. Till the time inflation stays high, you might have some more of these measures coming through.
So what's the way to position oneself, particularly in these steel producers? We've seen a very sharp knock in the names today. They're down 10 to 12%, the likes of Tata Steel, JSW Steel, SAIL. Do you get a sense that the overreaction, we're seeing a bit of an overreaction, the sell-off is exaggerated? Your thoughts on how to play it by way of a trade?
Yes, Rima. So, if you calculate only the current impact, then, it looks like that 10, 12, 13 odd percent is a reasonably, well-priced reaction. But the question then arises that would it stop at 15%, right? Could it not go to 20% or 25%? Because steel, unlike, non-ferrous or cement, is something that goes into a very large market space. And therefore, I think given the run that a lot of these companies have had, I doubt if investors are, going to come and, build this out in a fairly quick clip. So I would, sort of look against doing that. Contrary to this, I think non-ferrous complex had also sold off. Whereas if you look at the overnight rate or even the week's performance for aluminum and zinc, those companies have been, those commodities have been acting fairly resiliently. I think if you need to have exposures to commodities, I would rather prefer something like Hindalco or Vedanta, where prices have not actually fallen off the end commodity. And unlike steel, the government had not done anything for these companies in order to help them in the past. So, non-ferrous complex is a much more preferred complex for us.
All right. Hi, Jigar. Good morning and thanks for joining us. Since we're speaking about these sectors, I know that you like the insurance space. So take us through what are the names that you like within that. And also, just recently we had the big LIC listing. What are your thoughts on that? Of course, it's listing in a shaky market scenario, but what are your thoughts on LIC?
Yeah, good morning, Pavitra. So yes, insurance and banking are two spaces which we are extremely gung-ho on. See, everything said and done, people have been negative on banking just because FIIs own a lot of it. and they have been selling. And besides that, if you look at any bank's numbers, or not any, but most of the bank's numbers, they have been fairly resilient. So I think that is one space which we are very interested in. We have discussed our likes in the past: ICICI Bank, SBI, Axis Bank, Federal Bank, Canara Bank. It goes in that order. Insurance again is a very interesting space. LIC, as I had said, it's among the cheaper names now. We don't own it, but earlier a lot of fear was essentially that people would come in and look at this as a very expensive bet, especially because EV has a lot of exposure to the market, and therefore that gets impacted. But beyond that, something like an SBI Life or a Max Financial we've been holding on for a fairly long period of time. Those spaces continue to be very interesting because both for banks and life insurance, a rising interest rate actually benefits both of them.
All right, Jigar, we'll leave it at that today. Quick chat, but we hope to touch base with you soon again. Thanks for taking us through your call on the market and some of these individual sectors. We'll get into a short break now. But as